Investors loved the surge in profits in the second quarter. US growth exciting the market. Our guest has a buy on the stock, sees value here. We're joined by Grant White, portfolio manager and investment advisor at Endeavour Wealth Management. Grant, great to see you. Update us on Aritzia. Would you be a buyer still today with the shares above $90?
Yeah, this is a great story going on right now, Andy, and great to see you as well, by the way. But Aritzia, I mean, obviously a really great report here. We're seeing lots of really strong growth year over year with this company. But yeah, we still have this as a buy. Now, the large reason for that is that we still expect that they've got a lot of growth opportunity, and particularly in the United States, where they've shown that they can execute very well, and we believe that that's going to continue on. And so yeah, I mean, I still have this listed as a buy, and I think that we're banking on here is that they can continue to execute on a really great strategy that's been working for them, and there's more room to grow.
Indeed. I mean, what, same store sales up more than 20%. It's fickle. It's like show business. Your clothes can miss the mark, but it looks like they've got stuff women want to buy right now.
Well, yeah, I mean, I think one thing they're capitalizing on is it's a great product that's, obviously, women in particular are loving. But the other side of it from the business side is we love the way that the balance sheet is looking right now as well. The company is in a really good spot. Cash flows are strong. Sales increases are strong. Same store sales are strong. So from a fundamentals perspective, the company is in a really good spot. And I think that's really important right now because, we don't know what volatility is going to look like over the next little while, but I can expect that I think that there will be more volatility. And I think the quality of balance sheets is really important right now. And so when you've got an opportunity for a company like Aritzia, where balance sheet's strong and the fundamentals are strong, but they also have this great growth opportunity in front of it that we believe that they can continue to execute on, and management has shown that they can, then you've got a good opportunity where you can still buy into a company. Even though we've seen great increases on this one, we still think that there's more room to grow. And I think that there's at least 15 to 25% still left in this one over the next maybe 12 months or so, depending what markets do, obviously. But I wouldn't be surprised to see this give another 15 to 25% over the next 12 months.
The markets, them broadly, you see upside before the end of the year. Often a good time in the markets. Well, November and December in particular. You see possibility of another 3 to 5% in gains.
Yeah, I mean, this is a bit of a guess because I think that the markets there's tailwinds here that look strong that can help to lift higher. I mean, so 3 to 5% is kind of like I think a base case in my world, and it's because if we continue to see interest rate cuts that are at least in line with expectations, and maybe if we get a surprise one, then I think things can go even higher than that. But if we can get interest rate cuts in line with expectations, then I think this market has some tailwinds that are feeding it. There's a lot of really good stories going on right now. Companies are generally, I think, are doing quite well. Now there is still the undertone of concern, and I think that if you ask people on the street, most people are feeling not as great as what the markets would tell you things are doing. And so I think that there's still some room there. But in saying that, I mean, I think you have to look beyond the well-known names. And I think that, there's maybe some surprises outside of the AI story that, investors might want to look at with the focus on fundamentals again, because, I can easily see a pullback early in the new year as people look to take profits off the table. Thank you.